Let's get in Siddharth Sedani, who's joining us on the show. Hi, Siddharth. Good to have you on the show. Well, Siddharth, we want to discuss a whole host of stocks with you. But first up, let's talk about one of the losing stocks today. Dalmia Bharat, they have got JP Group's cement assets. It's a good deal, right? Then why is the stock under pressure? Because the street has various concerns. First up, why didn't the big boys like Ultratech Cement and ACC Ambuja go ahead and bid more aggressively? After all, the valuation-wise is looking pretty good. Second up, what about the capex? How much do they have to spend to get these plants up and running? That's a question mark. Then out of their total clinker capacity, you have the Dala Super facility in Uttar Pradesh, which is 2.3 million tons odd. That's still locked in arbitration with Ultratech Cement. So clarity on that front is awaited. And there's a Billai JP Cement Limited. That's a JV between SAIL as well as the JP Group. Now, SAIL out there has closer on 24% stake. Will SAIL bargain hard for that 24% stake? Then there'll be an additional outgo that goes out there. And last couple of points, well, there's clarity awaited on limestone reserves as well as the land in case they want to expand from here. And both these two parties, they're on board. But what about the lenders? Will they give the green signal to this deal? All these factors put together, Dalmia Bharat has come off a little bit from the top. Well, Siddharth, tell us, what's your view on this deal, first of all? And what about Dalmia Bharat? How do you approach the stock from here on?
Good afternoon, Nigel, and thank you for having me on the show. The deal happens to be a lucrative deal for Dalmia Bharat, and when you pointed out that why the other biggies of this sector are not bidding for it, other biggies are going after other companies and where they are using their balance sheet to get that deals done. So I think this would be a win-win deal for Dalmia Bharat because of two counts. One is they are broadly present in East and South. So this deal will bring in their presence in UP or Central India for that matter. Added to that, Dalmia Bharat already has a plan to reach from 39 million tons to 49 million tons in next 2 years. So this deal will definitely help them to increase their capacities. Of course, capex is required. That is to the tune of 3,000 crore capex, which is required. But overall, organically also, this company has been doing good. 12% volume growth we've been seeing. I think going ahead also we may see 12% CAGR volume growth, 15% revenue growth. So we are positive on Dalmia Bharat. The reason behind why stock is falling, I think sell-on news added to that, the stock has moved quite considerably well in last 3 months. So we can see a little bit of profit booking. But from a one-year perspective, I'm very confident on Dalmia Bharat with a target of 2160. I believe that the entire cement pack will be doing good, including Dalmia Bharat, and this deal will go well with the company.
Okay, making it a pan-India player. Siddharth, hi, afternoon. What about IT stocks? Today you are seeing a rebound. Do you think the worst of the price damage, the correction is in? Although we may have some more bad news by way of furloughs or perhaps the Q3 earnings may not meet expectations. But in terms of price damage, do you think the bad news is in the price or does it get worse?
Well, hi, Rima. Overall perspective, it would be a stock-specific way ahead. Broadly, prices, the negatives are priced in. But Q3 results, as you rightly pointed out, can be very much stock-specific. But broadly, the kind of spends we will be seeing in US will give us a road ahead for the IT and tech companies. Broadly, it's a contra play, and it's not a contra play from today. It's a contra play since 3 months, and I believe one should accumulate IT and tech companies in their portfolios because of a reason that now from here on only the spends, what kind of a spend cut or spend rise is coming in the month of January is one thing to see. Added to that, the December quarter result will give the last signal that how to go about with these companies. So broadly, I am quite confident on the technology companies, selectively on the large cap, and broadly very confident on the mid cap arena.
Siddharth, hi, good afternoon. The other space is the PSU banks, right? What rallies they are seeing, Siddharth, and even names like UCO Bank, which were the absolute the bottom rung of asset quality, etc., coming back very, very strongly. And of course, I mean, the good ones, Bank of Baroda, Bank of India, all of them are good ones now. If you look at the prices, UCO, by the way, is limit up 20%. Now, in the last 1 month, it's up 92. It's quite amazing. More left here, Siddharth, or what's your sense? How would you rate these names now?
Hi, Prashant. I personally believe the rally is broadly done because now it's a catch-up game which is going on in all the banks. As you rightly pointed out, UCO Bank is last nail in the coffin, which is catching up. So broadly, I am saying that PSU banking space, again, you have to be very selective. Still, there are a lot of GNPAs and slippages in the system of PSU banking space. Although there is a turnaround, credit growth is coming in the broad-based banking space, and that's why we've been seeing some improvement in the PSU banking space. But I would still put my neck out and stick to some large caps in this PSU banking space as an investment team. For a trading positional point of view, one can bet on the smaller banks, as you are rightly pointing out. But I would put my neck out and stand by with State Bank of India with the investment point of view. The rest, I would book some profits off the table.
Okay, all right. Siddharth, request you to hang on. Siddharth, what do you make of the real estate basket? You know, in that interview to us earlier today, Abhishek also said that we are in year 2 of a 15-year good cycle of real estate, and it's coming out of a lull. Your take on this space? Will you look at real estate stocks, or would you look at some of those ancillary plays?
Both of them, in fact, Nigel, and I concur the view of the management. I think real estate have seen quite a rough patch after demon, then after we've seen COVID coming in. I think this pandemic and everything has slowed down things, but now they are catching up in the direct real estate pack. We like something like Godrej Properties, again a leader in this space, strong balance sheet. The 4 projects which they launched in the Q2, 2 in NCR, 1 in Mumbai. I think 50% of the pre-sales has been already done of Godrej Properties. So Godrej Properties kind of play I would like to go. Ancillary plays are also there where I would like to put my neck out in finding out some kind of a wires and cables player like Polycab, which is again buzzing today. Added to that, Supreme Industries, which is again into the pipes division, doing fabulously well from here on. So ancillary plays also will be a great play. Added to that, direct real estate play likes of Godrej Properties.
Siddharth, do you look at Aditya Birla Capital? There was some news about reported by the agencies that how they are weighing selling their insurance and brokerage unit. So, you know, do you track this, and do you think this is going to have a material impact on the stock?
Well, we don't track Aditya Birla Capital and neither have a target on this, but the stock has moved after a lull period of many years, and now things are moving up. And I think on the back of the news which you are alluring to, I think things are moving up well. If somebody is having in their portfolio, I think they should wait out because of the biggest reason that stock has come up after a long time. So wait out for a quarter or so, but don't forget to review it out in terms of the quarterly performances are concerned.
Right, it's in a smart up move, but I think it's still below its IPO price. So that stay with us. We'll take a break here, the first on the show. We'll come back. We'll put the spotlight on Tata Motors.